It's a volatile, wobbly market. The Nifty is all but in the red right now. But one spot of green in this market is FMCG. In fact, it's been holding up one end for the last 10-15 trading sessions, and that's largely on account of good outlook coming in from the rural part of consumption. The FMCG index at the high point, even as the Nifty is at the low point of today's trading session. What's doing well in the FMCG segment? We're talking about three themes here. One, the rural challenge. Are we coming out of the rural challenge? 65% of households and 52% of volumes come in from rural India. The second part is premiumization and urban premiumization in particular. Urban consumption has been holding up FMCG for the last couple of years. Has that hit a growth wall or not? And the third one, of course, we're looking at these big, specialized changes coming in, specialized ingredients, convenience channels like quick commerce, a lot of local brands, etc. doing well. So with all these three as a troika, let's get discussing with Ramki of Kantar World Panel Division in Asia. Joins in. He's been an expert tracking the space for a while. We're happy to have you in the studio.
My pleasure.
The first question obviously is rural. Every company so far has been talking about there have been green shoots of rural recovery and they expect it to be a full-blown harvest towards the end of this year.
Yeah.
What have your data points on the ground level indicated?
Absolutely. So always rural has had a lag against urban. I mean, if you see COVID, urban saw COVID in 2020, rural was 2021. Inflation was earlier, rural was later. Similarly, the recovery of rural from inflation also has been later, and which is why we are beginning to see some green shoots in rural. And that has resulted in the last 2 quarters, the growth rate in rural overtaking the urban growth rate. That's one. Second is all the macroeconomic factors, which is typically what would you look at in rural? You look at monsoon, harvest, non-farm employment, and you look at support pricing. All of them are at the moment seemingly very positive. So given all of these and the fact that there is a line which is pointing that,wards, we tend to believe that rural is poised for a little more growth than where it is right now.
Some numbers, growth would be what?
So at the moment, it's rural is at 4.2% and urban is at 3.9%. We expect rural to go up to 6 by the end of this financial year. So that is the big hope for a lot of.
And how would that compare to, say, pre-COVID, the normal before COVID?
No, before COVID, if you go back to 18 and 19, rural has touched double digits, right? It was in 11, 12. One is not able to see at the moment immediately whether there is any time frame by which we can look at those kind of growth rates, but definitely 6 is looking feasible in the next 7 months.
6 is looking feasible, and you've also attributed stability in macros bringing seismic shifts in rural demand. So 4.2 turning into 6 on that base, not particularly bad. Let's talk about the other part then, urban, because urban has been leading growth for the last 2 years, if not more than that, and urban premium in particular. Now everyone's talking about consumption fatigue, middle class pockets being pinched, etc. What happens to urban consumption? I mean, premiumization as a theme, is it still on the cards or is it hitting a bit of a roadblock?
Right. So we earlier spoke about rural and how that's the hope. Rural is always a penetration-led growth, right?
Yes.
Getting into more households with a new brand or a new category. Urban, yes, there is room for penetration growth, but more than that, it's going to be consumption growth or price growth. Those are the waves that one sees in urban. In urban, there are some positives to look at. I mean, it is flattish at around 3.8 to 3.9 kind of numbers. But the good parts in this are that the premium end is seeming solid. And so therefore, every brand, every company has a portfolio. And the numbers are going to come from the volume, the spends towards which on driving penetration is getting more and more. And that has to be compensated by something at the top, which is definitely kicking in quite well. And that's why the premium end we are talking about. Where are the premiumized categories working better? Categories which make the life of the consumer better or which make convenience-oriented categories are doing well, and to some extent health-oriented categories towards this spend. Yeah.
Okay, and categories which make you feel better or look better or become prettier, right? So beauty and personal care, I'm sure. So just to sort of map this to the listed universe, and I think over the last 1.5 years, the problem is that these are great companies with great cash, but no growth or very low growth, right? 2-3% growth at rich valuations. Do you see that changing? I'm not asking you a buy-sell question, but the question is there another kicker somewhere around the corner for the listed FMCG universe?
Right. So the FMCG world is like, I mean, if you take a 20-year universe, I mean, we've all been seeing that it's always lagged the growth in GDP, right? GDP growth versus FMCG growth, always there's a lag. So therefore, what is happening in the FMCG world is that the money, there is a basket of money available with the consumer. But it's going towards a lot of things. It's going towards telecom, it's going towards healthcare, it's going towards... So that money is not the consumer is not getting attracted enough by FMCG to spend that money.
Which is a point even for rural, and that's one part of the debate, that when there is more money in rural India, whether that money will be spent on buying maybe jewelry from the nearest Tanishq or maybe a premium car, rather than more spends on toothpaste or a better soap. So I think that's a real debate.
So when there's more money available, one end is the premium car. I'm saying there's the other is to build some mobility. Two-wheeler, tractor,
aspirational
or jewelry,
rural India.
all of those. And even healthcare. I mean, the increased awareness of healthcare, and so therefore spending on healthcare, etc., that takes away money that comes into FMCG.
Absolutely.
So I think a task for FMCG companies is cut out in terms of how to make it more interesting and exciting for the consumer to part with that little bit of more money. That's where it is.
I would assume a lot of the money is also taken away by, cell phones and the internet data costs on a month, 400, 500 rupees taken out. That's taking away from the consumption of FMCG products or better consumption out there as well. Final question then before we let you go. What are the categories and companies of the future according to you? This is again not a buy-sell recommendation.
Right.
And is the wave of D2C on the wane after funding winter coming in? We've seen a couple of successes out there, a couple of good listings too. But by and large, what are your thoughts on D2C and categories and companies of the future?
Yeah, so in terms of categories, I would say that the wave that we saw with Swachh Bharat for home care, which is for toilet bathroom cleaners and insecticides, that wave to some extent is continuing for sure. In personal care, definitely the premium end is something that one needs to watch out for. And in food, the convenience foods, biscuits are definitely categories to watch for. That growth is definitely continuing. Snacks are a little bit of stress. I mean, after a lovely 5-year ride, snacks are in a little bit of a slowdown at the moment. Companies, I won't be able to name them in terms of what.
All right, you spoke about biscuits doing well. Incidentally, Britannia reports its numbers tomorrow. The street expects them to have about 7 to 8% sort of volume growth. So, Ramki, thank you so much for joining in, giving us a lowdown on what the FMCG sector looks like. The headline from here is that rural may actually grow at 6% by the end of this year itself. We take a short break, come back, talk about markets and more stock-specific action on the other side.